Bismillah, alhamdulillah, wassalatu wassalamu ala sayyidina rasulillah. Good morning everyone, and welcome to this financial accounting course. This is me, Dr. Bilarabi Abbas, and I will be your instructor for this module. So the medium of instruction is English for this module, and in this lesson you will explore one of the fundamental topics in financial accounting. By the end of this season, you should understand the key concept, the underlying principles, and their practical application. I encourage you to follow the presentation carefully, take notes, and reflect on the examples that will be discussed. If something is not clear, please write down your questions so you can address them during our discussion. Now let's begin the course or the lesson. So objectives of this lesson is to explain what does mean economic entity. A second objective is identify the roles of economic entity and explain operation flows and its types. Identify business classification and identify also functions of entity. So the last two objectives is understanding financial accounting definition and rules and functions, and state accounting regulation and principles. So as a general introduction, financial accounting is the fundamental discipline in business and management education. It provides students with the knowledge and tools to record, summarize, and report financial activities of an entity. This module focuses on the principle, methods, and techniques used to prepare financial statements that reflect to the economic reality of a business. The main objective of this module are to understand the concept of principles of financial accounting, such as the accrual principle, prudence, consistency, and historical cost. Second one is to learn how to record financial transactions systematically using a double entry system. To develop the ability to prepare and interpret financial statements, including the balance sheet, income statement, and cash flow statements. And lastly, to enhance the analytical skills necessary for evaluating an entity's financial position and performance. So this figure depicts the whole module lessons, and here in the course we have only 1, 2, 3, 4 chapters, and for the TD you have 4 series. And about the chapters, the subject of the chapters, we have almost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 13 subject. So you can take a look on the platform of Moodle, where you can find all the series and the chapters in PDF, and you can find also some videos, useful videos to support the modules. And for these modules you have 2 evaluation tests and so on. About the concept of economic entity, you can define as identifiable organization or individual that engaged in economic activities and it's separate from its owners for accounting purposes. So financial accounting is the systematic process of recording, measuring, and reporting financial transactions of an entity to provide useful information to external users for decision making. So here we can distinguish between the definition of economic entity and the financial accounting. So financial accounting is the system or the process of recording, measuring, and reporting, while the economic entity is the organization that have an economic activities where they using financial accounting to generate a financial information about the efficiency or financial efficiency of its economic activities. So here the figure that depicts the introductory chapters, where it contains a general notion of entity, definition of economic entity, and business classification and main functions of entity, while the second chapters is about the introduction of financial accounting, where you can find definition of financial accounting, objectives and forms of accounting, and regulation and principles. So let's begin with the introduction of the economic entities, and let's go to the definition. So the entity is the rational coordination of certain number of individuals and resources in order to achieve the objective it has set for itself. Usually the main or the general objective is to maximize profit. So the company is an economic and a legal unit that combine various factors of production, capital and labor and materials, to produce goods and marketable services intended for sales in market, with the aim of making profit. As we say, the main objective of the economic entity is maximizing profit. So companies can take various form and needs to generate profits and invest in order to exist or to grow. They are essential economic factors that contribute to the creation and redistribution of wealth through the payment of salaries to their employees, dividends to their shareholders, and taxes to the government and local authorities. So here you can see the transaction or the interaction between the agents. So we have producer and government and consumers. So the relationship between producers and consumers, so consumers will send on goods and services, while producers or the reverse, so consumer can give work, and so the producer can give the wage for workers. While the relationship between producers and government, producers provide taxes to government, while government gives the regulations and spending road and etc. So, and in another relationship between government and consumer, consumers can provide taxes also, while government can offers government benefits. So let's go to discover company transaction definition. So due to companies or economic entity activities and inherent demands, the company is at the core of the system, connecting with a number of partners. The following diagram highlights a series of partners who may engage in exchange with the company. So here is another figures. So you can see here personal, government and communities, consumers, financial institutions, and company and suppliers. Here these companies means other companies in the market. So the companies in the core of the system. So here, as we have seen in the last figures, here is like there is another agents who are in interaction with the company. For example, suppliers can offer goods and raw materials to the company, while the financial institutions can grant loans, and for the other companies can give maybe a capital contributions. So here you can see two types of flow. There is a physical flow with the blue arrow, and financial or monetary flow with the red arrow. An example, on the tax of France, the company is required to pay its taxes to the government, such as value-added tax for any delivery of goods or provision of services, as well as the corporate income tax, CIT, on profit and other taxes and duties. So here a question to test your understanding. So the question is, which of the following best define of the company? A social organization with no economic objective. B, an economic and legal unit combining factors and of productions to make profit. C, a public authorities collecting taxes. D, a financial institution granting loan. So the correct answer is B. A company is an economic and legal unit combining factors of production to make a profit. So let's discover the definition of flows. So flows is defined as the quantity of goods or monies transferred during a given period from 0 to 1 between two economic agents or parties, representing a movement of goods or money. There are two main categories of flows: real flows, which is goods and services, and financial flow, which is money or substitutes of the money. So this is it. So thank you for your attention.